Back to another episode of The Long and Short of It with Genesis CEO Jim Long. Good morning, Jim.
Hi, Jim. Good to see you.
You too. The European market is down 8% in pork production, something noted in your commentary this week. Can you explain that for us, please?
Well, we go back, let's say 2-3 years ago, the European market was hit by low prices relative to cost production. Part of it was oversupply, part of it was higher feed costs. So what happened is those losses led to an aggregate liquidation over a few months or a little over a year of a million sows. So what's happened is a million sows disappeared, and there's 8% less pigs, 8% less pork there, and their prices have spiked. Their prices have been record through the spring and summer. They've come down now, but they're still at levels higher than any other time of this year, at this time of year. You know, it's a classic example of low prices end up with less pigs. And what we see right now, we don't see expansion in Europe. Like, we do business in Europe is at Genesis. There's a lot of issues with environment, animal welfare, tail docking, lack of castration. They've got some really aggressive PRRS there that's creating high mortality. The last data I saw out of Spain, wean to finish mortality across the industry was running about 14%. Dead pigs don't get to slaughter, which is part of the factor here. High feed costs still an issue. Generational change on the farms. You get up into France, Germany, a lot of small farms. Kids get educated. They don't want to come back and work on 200 sow farms. And they leave, and there's just an attrition ongoing in that type of structure. And multiple things that are keeping a lid on, despite high prices, not really any increase in pig production coming anytime soon. Thing is they have less pork for the domestic market, and they have less market pork for exports. So that's the reality where they are today.
So you had a couple of graphs from Iowa State University on the lack of profitability. What's the quick snapshot that you got out of that data, Jim?
We put the data on the commentary this week, and it's Iowa State tracks fair to finish profitability. And the graph we showed was now back 20 years. The graph clearly shows that the losses over the last several months have been greater than they have been the last 20 years. And there has been more months of losses than the last 20 years. And the struggle we have as an industry, we're still losing money. There's going to be more months on there of losses before this is done. The graph also illustrates in the past is when you have periods of losses, the market recovers and you move into profitability. And the bigger the losses have been, the longer the profitability stays afterwards and the higher the profits. That's where we are. I think most people in the industry realize that this is what's going to happen, but it's so dismal in the marketplace and the losses are so much, it's hard for anybody, even though they know that's the reality, to have any optimism, because they're going backwards every day. And it's I don't know if you can really even say there's optimism. It's just kind of a reality that people realize the market's going to improve, but the billion-dollar question is when. Now, we believe that the liquidation in our mind started in about May in earnest. Okay. We know there's been tens of thousands of sows liquidated by major integrators. I know the USDA doesn't pick it up in the data, or hasn't picked up in the data, but it's in our mind, it's been reality. There's been other attrition. Gilt replacement's been low. Sow mortality is still at record levels. The herd has had attrition. We're going to have less pigs. In our mind, if we use May as the start of major liquidation, we should start seeing year over year, lower pig numbers, February, March. And then it'll continue, the spread will get bigger as we move through 2024. I know USDA says that there's going to be more pork in 2024 than 2023. We absolutely don't believe that. We might be wrong, we might be right, okay? But that's what we believe.
Any final updates on the US market?
No, not really. You know, I guess the industry's had some relief with lower feed prices, but the losses continue. I mean, all you gotta do is look at the public companies that have released their financial numbers. It's pretty simple arithmetic. If you look at where their losses are and the number of pigs they should have relative to their sow herd, they've all, from what I can see, lost at least $30 per head since the 1st of January. And it started before that. So that's, to me, is a snapshot of where we are in the whole industry. They didn't try to lose money. They're trying to make money. And it's why, if you look at, there's been so much upheaval in organizations, corporations with people. People have been fired or let go or changed because the losses have been devastating. There's lots of organizations have cut people because of economics and just where we are. And it's across the board. And to say it's anything but related to the financial situation, I think is incorrect.
Well, thanks for joining us today, Jim.
My pleasure. I hope we have a turnaround soon.